Foundational distinction. This is the theme that we have drawn on this year as we've redesigned our quarterly investor presentations and as I have drafted my annual letter reviewing our performance results for 2016. One of my observations from leading 3 net lease public companies over more than 20 years is that annual shareholder results can be impacted by overall market sentiment and present economic environments. But guiding principles stand to be the most impactful over the longer term. Our guiding principles have evolved over 35 years of running private and public net lease companies, and STORE represents an evolution of that thought. While each of our predecessor companies outperformed broad market benchmarks, they also bequeathed lessons that we took with us when we started this company in 2011. Here's the thing. The reason that foundational principles are so important is it's so hard to re-engineer a company down the road. Now, this is especially true if you're in the business of making long-term real estate investments like we do, with leases having initial terms ranging from 15 to 20 years. Here are just a few examples. If you don't start with a diverse investment portfolio, it's really hard to make a portfolio more diverse over time. If the real estate lease contracts we create do not have good lease escalations, then it becomes hard to alter our portfolio lease increase characteristics over time. If we don't have an ability to reinvest cash flows after dividends into new investments that can increase shareholder cash flows, it's very hard to increase our retained free cash flow and improve our stockholder dividend protection over time. Likewise, with an aim to having extremely little sensitivity to interest rate volatility for our existing $5.1 billion real estate investment portfolio, laddered debt maturities, which will be offset by our annual free cash flows, have to be established early on. STORE is positioned to have the annual gap between our free cash flow after dividends and our annual debt maturities to be between just 1 to 1.5% of our assets, which makes interest rate volatility almost an afterthought when it comes to our existing investment portfolio. Now, there are many other founding principles, from our managerial organization structure, to the way we source our investment opportunities, to our approach to investment risk evaluation, to our investment in our third-generation servicing and information systems platform, and to our exclusive focus on single-tenant operational real estate or profit center investments. All of these foundational attributes were intentionally designed from the outset of STORE and made a positive impact on our 2016 performance. So why talk about our foundational distinction 6 years after we conceived STORE? Because you begin with foundational principles and it takes a good 6 years to put that foundation together. STORE's foundation sets us apart and stands to be the greatest source of shareholder performance contribution over the long term. And when thinking about that long term, we are, as always, optimistic. This past February 1st, we were the founding sponsor of the first ever Inside Track Forum, which we held in concert with Arizona State University as an educational event for our customers. Our closing speaker that day was Captain Jim Lovell, who traveled into space 4 times, 2 of those to the moon. He credited these accomplishments to careful planning and the teamwork of a talented staff that made it possible to have wide margins of error in the pursuit of success. We are committed to these concepts as we continue to build on the foundational distinction that our team has created. Thank you.